Hello, folks. Welcome to Kudlow. I'm Larry Kudlow. So, today's CPI inflation report shocked Wall Street and the nation with a significantly higher than expected print. Pollyannas are painfully learning that there's no magic cure. There's no easy way out. After several years of excessive federal spending, regulating, taxing, and money printing, the highest inflation rate in 40 years is deeply embedded in the economy, and it appears to be spreading. The only significant decline came with gasoline prices. Overall, the top-line CPI came in at 8.3% for the year, food up 11.4%, even energy still up 24%, electricity up 16%, natural gas 33%, new cars 10%, and even with the recent drop, gasoline still 26% above a year ago. Rents up 6.5%, overall services up nearly 7%, core goods prices up 7%, used cars up nearly 8%. The so-called core inflation rate, ex-food and energy, has risen 6.5% annually over just the past 3 months, and it is accelerating. In terms of even broader measures, the Cleveland Fed's median CPI increased to 6.7% year on year, and the 16% trimmed mean, which just chops off the 8% high and low outlier prices, that's up now 7.2%. The Atlanta Fed's wage tracker is up 6.7%, but real wages had their 17th straight negative month. In other words, middle-class working folks are getting clobbered, absolutely clobbered. They're working more, but it's buying less. Around the kitchen table, grocery prices, home heating, air conditioning, electricity, baby formula, all these price hikes are killing the middle class. And then we have the unseemly sight of James Taylor serenading the White House in a bizarre celebration of Mr. Biden's so-called Inflation Reduction Act. You can't make this stuff up. Meanwhile, the stock market has fallen nearly 1,300 points. The 10-year Treasury is up 3.4%, and the 30-year fixed mortgage rate stands at 6.5%. Those are both a full percentage point above where they were just 1 month ago. Now, those are the facts. What's this all mean? Well, the Federal Reserve will be much more aggressive in hiking their target rate and draining excess cash out of the economy. Now, my view, they ought to raise the Fed funds rate a full percentage point next week, and another percentage point in November, and then a third percentage point increase in December in order to stop the inflation tide. This is a painful wage price spiral. We haven't seen one of these for 4 decades. Now, there's another approach here that would help save America from a truly deep recession. Move to the supply side. Cut tax rates. Open the fossil fuel spigots. Stop the regulatory stranglehold on business. Start rewarding success instead of punishing it. Implement workfare to bring over 4 million folks back into the labor force. But unfortunately, the big government socialists in the Biden administration do not understand any of this. Their woke progressive thinking has done great damage. It's an utter failure. They've taken a boom and turned it into a bust. But the good news is Americans know this. They have a lot of common sense. And that is why the cavalry is coming. All right? That's my quick take.